In this quick video, I will show you everything you need to know about so-called moving averages, which you can use to leverage trade crypto. So first of all, if you're on TradingView, you can activate such moving averages by just going up here to indicators and search for moving average. You will then find the so-called SMA, which is a simple moving average. And then if you go here to customize, we can set here different moving averages. For example, in this case, I'm using the 200, but you could also use the 100 or 50, for example. In this case, I'm using the 200 moving average. What does that mean? Let's go to the weekly time frame right here. And if we go to any point of this moving averages, which we can see in here in blue right here, in this case, for example, here it sits at $20,000. And why? Because it takes the prices of the last 200 weeks. In this case, it's a 200 moving average and we are on the weekly chart. So that means it takes the last 200 weeks, maybe from here to here, for example, and calculates the average price of the last 200 weeks and then comes to $20,000, for example. And that's how the price is calculated. And that's how it shows the moving average. And then in the next week, again, it takes the last 200 weeks, calculates the average. And then what we get from that is a very smooth line that shows the general trend of the Bitcoin price without these big spikes to the up or downside, because it takes the average, it flattens out that curve. So that can be very useful, especially on the weekly, for example. The 200 weekly moving average is very useful to indicate the bottom of a big bear market. We can see it in here. We can see here it hit it perfectly. Here it was a little bounce again off it. And in the last bear market, we went a little bit below it, but still it was a very good indicator of the bottom of this bear market. So of course, the higher we go above this line, we can see these are the big bull markets. And then of course, at any point, we can also see it pretty much comes back to it again. So that is to be expected at some point in here probably too. And that's how you can use it in this big time frame. But of course, you can also use it on the daily, for example. You can pretty much see it's a very good indicator of these bear and bull markets here as well. We can see, for example, in this big bull market, we can see that it bounced off it multiple times in this bull market and stayed pretty much all along above it. Then here it went below and the bear market started, and it has been shown as resistance in here. Same goes here for the big bull market. We have been pretty much all the time above it. And then here in the bear market, we went below it. And of course, in here in the bull market, as you can see so far, we consolidated maybe a little bit here, but still we are pretty much above it. And that's how you can also use it to indicate those bigger trends. If you're looking for the best crypto leverage trading exchange, make sure to check out the links in the video description, where you will always get the best sign up bonus possible. And if you have any other questions, feel free to ask them in the comments.